From February until the end of this year, there were only 2 major dips on Wall Street. The first occurred in June, triggered by the Brexit results. The day after UK voters opted to separate from Europe, the major U.S. indices fell between 3% and 4%, wiping out $800 billion in U.S. market value. But just a week later, most of those losses had been recouped.
The fundamentals inside of the globe had not changed just because of one vote by the UK people to leave the EU. So that's why the market came roaring back in the aftermath and gained some into the summer.
Other market watchers like Sam Stovall thinks the problem could come back to haunt investors as the process of Brexit takes hold.
They were embracing what I call a Scarlett OHara mentality. Oh, fiddle-dee-dee, I'll worry about that tomorrow. So it became a front burner event that was simply moved to the back burner.
The next big dip occurred on November 4th, the day the FBI announced it was reinvestigating U.S. presidential nominee Hillary Clinton's personal emails. An air of uncertainty blew into the U.S. election at a time when Clinton was widely assumed to win. On election night, as it became increasingly clear Trump would win, Dow futures fell 800 points. But by the time the markets opened the next morning, they were in positive territory.
Investors said, okay, it will be a Trump presidency with a Republican Congress, totally Republican Congress. What could go right? And I think investors basically said, oh my gosh, we can have an awful lot of things go right.
The main beneficiary of the Trump bump was bank stocks, mainly because of the expectation Trump will loosen financial regulation.
Financials were dead money for several years, and they came roaring back. And as long as the yield curve continues to steepen, regulations get reduced, they will continue to perform well.
Rising interest rates are also good for the financials. The Federal Reserve announced a rate hike in December, and it expects to raise them 3 more times in 2017. Another sector that rebounded towards the end of 2016 was energy. OPEC's decision to cut production for the first time in 8 years sent energy shares soaring. Bliss believes 2017 will be another good one for stocks, but he is concerned about Europe.
Populism seems to be spreading the globe. That has the potential to be very fun to watch, but it also has the potential to be very disruptive to our existing order, both in terms of global trade and the way we do business and the way companies make money. So these are some of the things that we'll have to be careful about and watch going into 2017.
Stovall also believes events abroad could hurt U.S. markets in 2017, but he remains optimistic.
I think the overall trajectory of the advances will come down from what we've been seeing since Election Day, but it'll still remain positive, and therefore I am a bull, but with a lowercase b.
If Wall Street continues to rally in the first quarter of 2017, that will mark 8 years of a bull run. And that, Stovall says, will be the second longest rally in the U.S. since World War II. Karina Huber, New York.